Hello traders and welcome to our OptionsXO market review for the New York session, Thursday, April the 14th. European markets soared yesterday on rising oil prices and amazing data from China and Australia. The shares for British retail giant Tesco fell nearly 8%, and today the news is different. At present, most indexes are sputtering around the zero, more up than down, and we're awaiting a monetary policy from the UK which will probably rest on stable. Meanwhile, the sterling is sinking ahead of the report, and chances are Mark Carney will prefer to divert talk towards the upcoming EU exit referendum. Core monthly CPI for the Eurozone, on the other hand, is up from last month's 0.4% to a very pleasing 1.5%. Alongside food and energy, though, inflation is still at 0% year on year. Yesterday also saw the US Fed's beige book out, indicating higher wages and a strong jobs market. Consumer spending is picking up and retail prices are also rising modestly. Also expanding after months of near stagnation were business spending in everything from construction to tourism and pharma. In fact, total US spending on drugs last year was up 12% to about $425 billion. Companies have been under attack for the high cost of medicine, and the response has been that nearly nobody buys for total cost. Retail sales unexpectedly dropped this past month, with the main downforce being the automobile industry. Analysts were surprised in the trend, since US consumers are never that calculated with their spending habits. Across the border in Canada, lending rates will be kept at 0.5% on the basis of the oil shock, according to local politicians. The Nikkei spent most of yesterday rising on a finally weakening yen. As the session drew to an end, however, the trends reversed. As of late this morning, the index was up again and consolidating. Car shares are recovering, and even Sony was up 0.4% in Australia. In Australia, unemployment fell to 5.7%. Still, the overall picture is worrying, and that's mainly thanks to oil. The US yesterday reported a whopping 6.6 million barrel inventories build, or triple what was expected. On the other hand, the US Energy Administration believes the glut will be almost immediately taken up due to the inactivity of shale oil producers. In addition, OPEC yesterday announced it was projecting a cut to global demand for 2016 of 50,000 barrels a day. The easing out comes after 3 days of solid gains. On schedule today is the Bank of England's monetary policy vote and report at 11. That will be followed by initial jobless claims and CPIs from the US at 12:30. After that, at 2:30, speeches from the Fed's Dennis Lockhart and the FOMC's Jerome Powell. Come back tomorrow for our London edition, and in the meantime, have a great weekend.